Hello, everyone. Thanks for joining us today. We're here for an expert Q&A panel to talk about payment processing. So this is actually a really hot topic. We're glad to have on our panel Mike, CEO of Xanderpay. That's Mike. I think you can see his name on the screen. We'll have them give a proper introduction in a moment. And then we also have Paul, CEO of Ascent. And then we're also expecting Cameron from Yapstone. We had a little technical difficulty, but we're hoping to get him on the line here shortly. So we have all three folks to join in the discussion. And Heidi, we also have on the line, so she's going to help facilitate this expert panel today. Heidi's a member of the Ascent team. Okay, I'm going to share my screen. We're just going to go through a few slides to talk a little bit about the Association for Short-Term Rental Homeowners. For those of you that have never joined one of these before and aren't sure who we are and what we're about, I'm just going to give a quick overview of that. And my name is Heather. I'm the Astro Board President. Heidi, can you see my screen okay?
What's that, Heather?
Oh, you can see the screen okay?
Yes.
Great. Okay, thanks. So just a little bit about astro.org. We're a new association. We've been live for about 2 or 3 months now. And our mission is to provide professional development for short-term rental homeowners. So education, resources, information. And we think of short-term homeowners in 3 buckets. One is you're aspiring to own. So you're looking for investment strategy or financial tools. The second is you own a home or several homes and you're self-managing, or you do rent by owner. And then the third bucket is you own an investment property, but you have questions about finding a property management company to help you, and questions about what might be needed in an agreement and things like that. So this slide just gives you a quick overview of what you could see when you go to astro.org, available to the public. We do provide weekly blog content. It's free to sign up for our weekly newsletter. And then we also have a business directory where you can get information about companies like the folks on the line today. Then once you become a member, you have access to a lot more networking and resource. So you can see here the community is an interactive platform where you can dive into a specific topic. And this is really designed to help cut through the clutter of what you might be trying to accomplish on Facebook as an owner, and get to the information you need. And then as an association, we're committed to vetting the expert advice to make sure things are accurate. We'll pull in folks if we don't have the answer already within the community. And then you'll see here, in addition to what you get with the community, we're also always working to provide education and partnership through other organizations. So for the lodging industry, we see that short-term rental homeowners are a critical stakeholder in the lodging industry now more than ever before. And COVID has only accelerated that. But as part of the lodging industry, we're in communication and collaboration with organizations like those you see here on the left. We also see a big opportunity to partner with university and hospitality programs like Penn State and Cornell. Currently, we're helping Penn State develop their first research paper on the short-term rental industry. And these hospitality programs are realizing they need to expand their curriculum beyond hotel or traditional lodging. And then there are lots of local organizations, and many of these are focused on legislative and regulatory conversations. So though our goal is not to be in the trade organization seat to actually talk with legislators or lobby, we certainly want to work with those organizations and provide that information so members can get involved and stay informed on anything they would like to and know how to get involved. And then on the right here, you have advocacy, thought leadership, and media. And again, we're always pulling from other consultant experts and, staying in touch with media to make sure you have updated, accurate information. I mean, never a dull moment in our industry, especially these days. So with that, I'm going to hand it over to Heidi, and we're going to jump right into this payment processing conversation. So take it away, Heidi.
Thanks, Heather. Yeah, really excited. Thanks for that introduction about Astro. It's wonderful to share all of our great resources with everybody. And I wanted to just move right into introducing our panelists. I'll go ahead and introduce each panelist, give you about 2 to 3 minutes to talk about your industry background, the company that you're working with currently, and a little bit about your industry experience. So we'll start right off with Mike Carlo, CEO and co-founder of Xanderpay.
Well, thanks, Heidi. Let's see. I'm going to wear 2 hats today. One of which is I am actually on the board of directors of HEDNA, which is one of the associations that you had mentioned in a couple of slides ago. So part of what I do is I'm on the board of, and I've been the longest serving board member there for about 8 years, focusing mostly on payment topics. And I've worked in different parts of the hospitality payment industry, travel payment industry. I worked at a B2C provider, a company called Global Collect, which became Ingenico, which now has become Worldline. And then I've worked in some of the payout option companies, like virtual credit card company, commission companies. And after all of that, I, a couple of years ago with some friends, started a company called Xanderpay, which is really a small, narrowly targeted business focused on B2B transactions between hotels and third-party booking platforms. And that's what we started as. We've developed a couple of new products, and then speaking, with the short-term rental industry, there are some significant opportunities for us in this industry. It's a little bit different because a lot of the recipients of funds aren't businesses, and there are actually different regulatory requirements, but it's something that we have our research teams looking at. So that's my, I hope, 2 to 3 minutes.
That's perfect. So it sounds like Xanderpay is sort of a bridge type of company within the payments industry.
Yeah, we see that there is a ridiculous amount of inefficiency in the payment industry. And on the hotel side, we're pretty sure that the hotels pay between 1% and 4% more per booking than they need to process payments. And our aim is really to reduce that dramatically.
Perfect. That's great. Well, thanks for being here today. Appreciate it.
A pleasure. Anytime.
So next we've got Paul Guccione. Hopefully I said that right. My time's a little rusty, but thanks for coming to join us today, Paul. And he is with Ascent Processing. He's the CEO there, and we'll hear a little bit about your background.
Sure. Did you hear that? That's going to be problematic.
I mean, it is like being in a club in the 90s. So, none of us been able to get out very much.
We could all mute to try to make sure that doesn't happen when you come off mute. That was a little odd. Let's try that again. We can all mute for you.
I think it's going to be a me problem. Let me jump out and try and come back in.
Sounds good. Yeah, we didn't have this problem when our trial run, so we'll try to get you back.
Yep. We'll be waiting for you, Paul. So we have had some challenges. Let's see, make sure I'm not. Let's try it now. Okay, no echo. We'll give Paul and Mike just a moment to reconnect. We're actually having a bit of a challenge having Cameron McCrae join us from Yapstone. But if you can hang tight, hopefully we get these challenges sorted out. Let's test it now, Paul. How's your?
How's that sound?
Much better.
All right.
Perfect. Okay. Now back into your background.
Wasn't happening before we got on the before we went live. My name is Paul Guccione. I'm with Ascent Processing. I've been in payments for about 20 years. Basically, with the company, it was a small company. We ended up being purchased by Global Payments about 5-6 years ago. I then started my own consulting company to help people with payments issues. I've found Ascent, and I've known the people at Ascent for a long time, and I love what they were doing, the way they treated their employees and their clients and their partners. I couldn't wait to join the team. So Ascent has been around for a little over 20 years as a payment solution provider. They we focus completely on the vacation rental industry. Any sort of short-term rentals, even getting into corporate housing and things like that. But the team has decades of experience in this industry. It's really where we focus. We're really big on educating and trying to advocate for the industry, trying to be the solutions experts when it comes to payments. We really want to be your destination for payments, but at the same time, we really want to help. And Astro was it was really exciting to meet the folks at Astro. The way they're trying to educate people is right in line with the way that we want to do things. So really appreciate the opportunity to be here today. So thank you.
That's great. So you focus on the RVO demographic as well as working with property managers?
That's right.
Awesome. Well, thanks. Glad you're here today. And why don't we just jump right into it? We'll see if Cameron joins us, and maybe we'll take a quick moment to let him do an intro. Let's start the conversation. I know we've got a lot of great questions. These have actually funneled in from many of our members at Astro. They're homeowners managing their own rentals, just like much of our audience. So these are some of the real challenges people are seeing in the industry today. And if you want to share back the deck, Heather, that'd be a huge help. But we were going to start things off with a little bit of terminology, because diving into how it all works in the payment world, there's so many moving parts. We really want to zero in on some of those areas and how they relate to short-term rental homeowners, because they are our core audience. So with terminology, can you bring the deck up?
Sorry, just wanted to, if you're good to go, it is better for me to stay on screen to try to get Cameron on. If you're okay, I'll let you roll with the questions on the side for a little bit longer. Okay, thanks.
Okay. So our first question that came through one of our homeowners, there's a merchant bank, there's an acquiring bank, there's a processor, there's a credit card issuer, and then there's a bridge, kind of like what we discussed with Mike at Xanderpay. So between all of those entities, can you help explain what the short-term rental homeowner needs to know with regard to all those different entities in the industry? And maybe, Mike, we'll start with you, since you're that bridge company that we kind of talked about initially. And we've got you, you're on mute right now, Mike.
As I predicted in the pre-conference, something I do often. Could you go through the terms one more time?
Sure. So we've got merchant bank, we've got acquiring bank, processor, credit card issuer, and then the bridge between everything.
Got it. So from the perspective of the merchant who's receiving the card, the two most important ones are the acquiring bank and the merchant bank. The merchant bank is where they have their account where the funds get sent to. The acquiring bank is the company that's going to do the processing of the cards for them. The other ones really are probably not going to be relevant to them. If they're using a gateway, the gateway is actually connecting them to their acquiring bank. So they may be talking to their gateway, and they may be the gateway may be representing an acquiring bank, but ultimately the most important part of that scenario is they need to know who the acquiring bank is, because that's who they're going to end up having their money sent from, and who they're going to have to deal with any reconciliations or chargebacks.
Okay, great. And anything to add to that, Paul? I can see you nodding.
Yeah, I totally agree. There's so many different places that this transaction touches as it goes through the payments ecosystem. And the question being, what do I need to know about all of that? I think Mike nailed it on the head. The relationship that you have with your acquirer, they're the ones who are taking the risk on those transactions. They're going to set limits, work with you on chargeback issues. They're the ones who are setting the pricing for the most part for what you're going to be paying. But there's also the gateway that you're using that's important. The software that you choose is important. That software that you choose, which gateways does it speak to, which can dictate which acquirers you need to go to. So those are all just questions that you need to ask as you're growing and you're starting to do things like upgrade your software and your volume is starting to increase. You need to know what that relationship with the acquirer is, and what those terms are.
So a lot of it comes down to, and I know we're going to drill into this more later on, but who merchant of record is. And that was also one of our questions is, who needs to be merchant of record? Certain booking channels require that. Other websites, if you have your own direct booking website, you're going to need to process in some capacity. So anything to add to strategy there? Yeah,
we're big on, we think you want to be merchant of record all the time. When you're not merchant of record and your funds are being commingled with a whole bunch of other people, you're not merchant of record, you're what they call a sub-merchant. So the real relationship is between the master merchant and the acquirer, and you're kind of at the mercy of what your master merchant or that payment facilitator is going to be, whether that's an Airbnb or some other PayFac. There's distinct advantages to like that FDIC insurance, where that money is always in your bank account on the way to the bank. It's insured the entire time. You have control over things like your descriptor, what's going to show up on the cardholder statement. You get that in the non-merchant of record area in a lot of places, but not always. And then there's potential issues, and it's hard to get those things resolved. And if you've got the name of your business or the name of your property management company showing up on somebody's credit card statement and it's not what they expected, that is a nightmare from a chargeback standpoint. So you just believe you have a lot of control over your account when you're the merchant of record.
I can tell Mike you had something to add there as well.
Yeah. I mean, I don't disagree with what Paul's saying. I think there are scenarios where, depending on who is the merchant of record, it could be beneficial to not be the merchant of record. I think when you're talking about having one of the sort of like an Airbnb be the merchant of record, it really depends on the economics that they're offering you and whether the economics would be better as a standalone merchant of record or better through them because of their economies of scale. I think another impact is, and there are also payment companies out there that collectively act as merchant of record for smaller travel merchants, and they could be an opportunity as well. The last thing is, I think that in the short-term rental space, we don't spend enough time speaking about North Americans visiting our properties. The culture of vacation rentals for Europeans in particular is very high, and when you are a merchant of record for someone paying with a European credit card, the fees go up pretty dramatically, 1% to 2%. And then, if you're working with someone, you might actually be able to, keep those rates lower because of the way they process. And you can also make some money on a foreign exchange if you know that that you're getting a lot of guests from Denmark, for instance. You might offer your space in the Denmark krona, and you can build in a markup there. So I think to what Paul was saying, I agree for 90, maybe 80 to 90% of the situations. But as the 10 to 20% start to grow and become more sophisticated, I think there are opportunities where where there are opportunities to not be merchant of record makes sense.
Okay, that's super helpful. So essentially, you could talk with your payment processor, whichever one you decide to work with, and drill into those details and opportunities.
Yeah, the only thing I'd add, and I agree with Mike too. When you're not merchant of record, getting that initial account set up is a ton easier when you're not the merchant of record. That merchant of record setup process takes longer. There's underwriting, business financials, but that's all because you're not intermingled with a whole bunch of other people.
So the benefits of being merchant of record outweigh the risks of the potential for disputes, chargebacks, whatnot.
I think so to some extent, yeah. And it really kind of depends on the situation and where you're at. If you've got one property and you're doing $10,000 a year, that's a different story than somebody who's 3, 4, 5 properties and doing hundreds of thousands of dollars a year.
Right. Absolutely. Okay. Maybe we'll.
I think just if I could add, Heidi, I think the takeaway really is there's no one right answer, and the industry will provide lots of different opportunities depending on the state of the business.
Right. Okay. Super helpful. I know we've got one of our audience members, Scott, has a pretty specific question as far as wanting to know whether Ascent or Xanderpay has any value for them utilizing it versus, sounds like he's currently on Stripe. So maybe, Paul, you can speak to that real quick.
Yeah, I have nothing bad to say about Stripe. It's one of those where it's an easy setup process. You can be up and running in a couple of days. The pricing, just about anybody can beat that pricing. It's case by case what your volume is and how much it is that you're paying right now, how much money Ascent or any other processor could possibly save you. It's definitely worth looking into. So yeah, let's take a look.
Okay, perfect. What about a Xanderpay, Mike? Is that an option, or are you still more that bridge that you discussed?
We're more the bridge. I mean, we certainly have acquiring partners that we have fun, close relationships with. I'd be happy to provide introductions to them, but I've how do I say this? I've always been a little amazed by Stripe and the hype that goes around Stripe. I think that if I were a homeowner, I would not necessarily assume that they're the only option. They're just a brand name, and just because sometimes you, as I think Paul alluded to, sometimes you pay more for a brand name. There's another question about chargebacks. I mean, there are some of the acquirers that will provide a chargeback indemnification solution so that you can not have to worry about chargebacks and just pay a higher rate of a higher rate for the transaction. So as you start to become more sophisticated and have a few more properties, and I think that it makes sense to do just a little bit of research to see what's out there beyond the incumbents.
Okay, great. I know payments in general, trying to get them as quickly as possible is a really big topic as well. Trying to obtain a booking revenue 3 months or even 6 months prior to the actual check-in date. And there's been so many shifts in the industry over the last couple of years for those options. Are either of you familiar or aware of an opportunity where you can have your revenue in advance?
In advance of the actual stay?
Right, yeah, rather than waiting to release funds post-stay.
Yeah, we still set up people to receive their money within a day or two, even if the booking isn't happening or the stay isn't happening for 3 months, 6 months, a year. There's risk associated with that from the acquirer standpoint. If you're keeping that money in an escrow account or a trust account, you're really not supposed to be touching those funds until the stay actually happens. We were able to get through COVID without having really any impact. A handful of accounts that we had to deal with relative to the amount of money they had taken, and then COVID hit. You still have all that money. Chargebacks are starting to come in. We're processing more refunds than we are sales. The acquiring banks that are holding the risk on all that get nervous. but we were pretty successful at being able to show here's what the outstanding money is for the stays that haven't happened. Here's what's in the bank account. Everything's fine, and we can keep boarding things as usual. And we made it through pretty well. It wasn't the same like that for a lot of people, but March, April, May was pretty wild in the acquiring industry, especially in travel.
Definitely. Is there a time frame involved, a maximum amount of days or months that you'll release those funds to the host?
No, we release the funds to the host 24 to 48 hours after transaction.
Okay, perfect. That's great to know.
Mm-hmm.
How about on your end, Mike? Are you familiar with any alternatives or options?
I mean, what I've seen on the acquiring side is the notion of pairing the acquiring with insurance. So, and this is more of a European solution than I've seen in the U.S. But acquirer offering insurance to travel companies in case the travel company goes out of business, the transaction is covered. So that's something that would get cash faster. The other thing is the other way to get cash and to way to look at this is to move beyond just credit card processing. I mean, there are other forms of payment, whether it be a Zelle wire or a Venmo transaction, where the funds do get to the homeowner more quickly. From a guest perspective, there's a bit more risk with that, but if we think about the market where we're at today versus the market where we're going to be in next summer, I'm going to guess that next summer, after some months of vaccines, there is going to be a lot more demand for a smaller amount of supply. And when you get to that environment and you're a homeowner, you can, if you have a desirable location, you can start to say, I'm not going to take a credit card. I need you to pay me with Venmo or with Zelle. And yeah, there's a little bit more risk. That's another area where insurance comes in. But there are payment methods that do not operate the way the credit card schemes do.
That makes sense. That was actually one of my next questions was how can the host save money on fees potentially, where credit card fees seem to be, in some cases, increasing, and it's a percentage, obviously. It's not a flat rate, which that was another one of our questions, but we can circle back. But what, if anything, can a host do to help keep those fees or those commissions as low as possible and more money in their pocket?
I would make sure they look at their statement every month to look at what they're being charged for. And it's difficult because, as a host, as a merchant of record, you're not going to be able to say, it costs 2% to process this with a lot of acquirers, because some cards have, all these miles associated with them. So they're going to cost 3%, and somebody might use a debit card and that's going to cost 75 basis points. So it's just understanding what you're actually paying is sort of like a puzzle. And with the pandemic, we all have time for puzzles. So this might be a good one to look at. I would work to figure out a way to not accept higher cost credit cards.
Yeah, you took the words right out of my mouth with the check your statement every month. There's things that happen. Not new fees show up that you might not recognize. Not only just to look at the fees and are you paying what you expected to pay, but did you get all the money that you thought you were going to get? Make sure you're doing that reconciliation off of that statement too. It costs you a lot more money if you miss a batch or a large transaction and you don't notice for 6 months. That happens. The other thing, you're not locked into any rate that you have. For almost any acquirer, they're open to renegotiate. So if you can find a better deal someplace, you take that back to your acquirer, talk to them. As you grow and your volume increases, that can give you more leverage for that conversation with the acquirer to say, hey, I'm doing 10 times what I did when I signed up. Let's talk about what the rate is. The other thing is, all the different acquirers have different programs. So you can have a flat rate program where we're going to charge you a flat 2.5% for everything. That's really simple, and simple isn't always great. Chances are whatever that flat rate is covering not only the expensive 3% transactions that those cards cost, but it's also covering those 75 basis point transactions. So if you don't, the good side of the simple one is, it's 2.5%. You can look what your volume is going to be, and you can put that in your budget for here's exactly what I'm going to spend on credit card processing. At the end of the year, though, you're probably going to be better off if you were on some sort of interchange plus or a pass-through program where if that particular card costs 2%, you pay the 2% plus the small markup to the processor. So there's a couple of things. The biggest one is check your statement, and the second one is you've always got a choice. So don't feel like you're locked in. Be ready to go shop around.
Great, thanks for that.
To add to that, just one piece. I think it's important, having worked at an acquirer, the acquirers aren't going to give you a flat rate that puts them at risk.
Right.
So 90% of the time, the acquirer giving you a flat rate will make more money on that flat rate. Otherwise, they wouldn't be offering it.
Okay, good to know. And I didn't realize before that flat rate was even an option. I was under the impression that only a percentage commission.
Well, it's a flat. What we mean is that the percentage rate is flat. It doesn't change. So it's 4%. But it's 4% for all transactions. And what happens behind the scenes is some of the cards are 3%, some of them are 2%, some of them are 3.5%. But rather than the merchant of record having to do the math, they just know that it's 4%. In all likelihood, when you get a 4% flat rate, you're going to end up paying more over the course of the year.
Okay, that makes more sense. They're just trying to make sure they're fully covered by going with that percentage point. Okay, perfect. Well, I think we're still trying to bring Cameron on, but I don't see or hear him yet. So let's keep it rolling with our questions.
So Heidi, if you want to give him a chance to go off mute, I do think we might be able to hear him.
Yeah, are you able to hear me now?
Yes. Hey, Cameron. Thanks for not giving up and joining us.
It looks like the video may still not be working, but I'm afraid to try to fix that and kick myself off again. So I'm happy to continue this way. I know I'm a little bit tardy at this point, so apologize for that.
No worries. You want to give us a quick little 2 to 3 minute background of your involvement in the industry and Yapstone today?
Yeah, definitely. So hi everyone, my name is Cameron McCrae, and I lead strategy and operations for Yapstone, which is a payment processing company focused on verticals that have traditionally been underserved by electronic payments. So a couple of the largest for us have been the travel and rental verticals. I've been with the business for about 8 years now, so have experienced a lot of growth both within the company as well as the industry as a whole, and work closely with our customers throughout the short-term rental space. Just some quick background on Yapstone. We were founded in 1999, based in the San Francisco Bay Area, with employees across the U.S. as well as a team in Ireland that powers our international operations. We've raised over $100 million in venture capital from some of the top institutional and strategic investors, including Excel Partners, Premji Invest, and MasterCard. Within this market specifically, we've powered billions of dollars annually in travel and rental payments, and support customers. Everyone from 1 unit owners and managers to some of the largest software companies, OTAs, and hotel companies in the world, in the broader travel segment. And then I think what's a little bit unique about Yapstone is we as I mentioned specialize in this industry, but the bulk of the capital that we've raised over the last several years has been primarily to build out our technology infrastructure and platform, which really allows us to serve the travel market in particular through risk management technology and capabilities, the ability to onboard merchants to accept payments within seconds, fight fraud and chargebacks, provide detailed reporting and things like that. So yeah, I won't take up too much time. That was probably a couple minutes anyways, and I know we're running short on time now, so happy to be here today.
Yeah, thanks so much for that background. I've always been curious about the background of the name of the company. Is there a quick answer?
Yeah, when it was so when the company was founded, was sort of the tail end of the .com era, when everybody was trying to come up with sort of catchy, slogans and one name names. And our founder, actually over a game of poker with some of his friends and colleagues, they were just trying to throw out names, and there's an island in the South Pacific called Yap, and so they actually have a currency called the Yapstone, which counter to what everybody on the phone today is trying to accomplish with the digitalization of payments. Currency of these massive boulders, but they thought it was catchy at the time, and it's just kind of stuck and grown with the company over the last 20 years.
I like it. Thank you. That's fun. Well, let's move right along back into deposits, where we were going to chat. And we touched real briefly on what solutions are available to help with security deposits in the payment industry, as well as in what scenarios do you need to pull in a damage waiver and still do a security deposit. So maybe, Paul, we can start with you on that and get your thoughts.
Yeah, the security deposit question is interesting. We recommend our folks don't use credit cards for security deposits. There's different chargeback rules around what happens with security deposits versus the payments that are made for just the normal stay. Definitely encourage people to research, damage protection programs, other ways to get away from that security deposit language. We're seeing less and less of that with the property managers and people that we're working with. They're finding other ways to cover that security deposit. As a processor, we don't know what's a security deposit and what isn't. They all look like a transaction. So it's really hard for us to try and manage what risk is out there relative to what's a security deposit versus just a poking in the future. So highly recommend looking at damage protection. There's revenue opportunities there, and just try and get away from the security deposit stuff.
That makes a lot of sense. Yeah. Cameron, anything to add to that?
Yeah, I would just echo what Paul said, and our system is flexible enough to be able to handle a variety of payment types, including obviously security deposits, as well as the ability to refund those deposits down the line. But in addition to sort of exploring solutions that are dedicated to damage prevention, insurance, and the like. We can offer things like line item payments for, where you have one payment for the principal booking amount, and maybe another line item where it's a damage deposit, a refundable or partially refundable damage deposit, and then can also support things like installment payments where multiple parties can pay and split their payment, or you can break a single payment up into a series of installment before the check-in date.
Okay, that's great. If there was a scenario where you were taking a security deposit through your credit card processor, what's a realistic time frame for releasing it? Is there any kind of industry standard? And Mike, maybe you could speak to that.
There are standards about releasing the authorization, but that doesn't mean you can't reauthorize it. It's sort of when you authorize something, it sort of holds the funds for a period of time, and at a certain point, and I think the example you gave prior to this was 7 days. at the end of 7 days, you can still authorize that transaction, but that hold that you have taken on the card to settle within 7 days, that goes away. So it's possible in that scenario where after 7 days, the authorization has dropped off, and there still may be the same amount of funds available. There may not be. So that 7 day window that you're talking about, that's based on the available balance. It basically sets aside the available balance on the card at the day that you run it. You can then run a second. If it expires, you can run the charges again, but there just may not be the funds available, and you'd have to but there might be the funds available. So you have to sort of it's a little bit dicier. I don't know, Paul and Cameron, if you have a different view on that, but it's going from an absolute you can do it to the card's still active. It probably still has availability, or you'll be able to force it through different mechanisms.
Yeah, I can add to that a little bit. The pre-auth piece, I was talking to the property manager earlier this week, and they were thrilled to stop dealing with pre-auths. The example that was in one of the questions was, what happens if the stay is more than 7 days? Well, exactly. If it's a 2-week stay, you're still not guaranteed to get those funds. The authorization has fallen off. If it's a debit card, they may have drained their bank account. Causes all kinds of problems. But I think you fix this pre-auth question in the contract. Whatever the agreement is between you and your guest, whether you're using the damage protection, you're just not worried about pre-auths, you're just running sale transactions. Every system that you could possibly use to process with these days utilizes tokenization. So you don't have that credit card number anymore, but if your contract says whatever it says about when I'm going to charge you and what I'm going to charge you for, you've got that card on file, you bring it back up and you charge it. If it declines, you've got to go a different path to get paid. But don't even mess around with the pre-auth stuff is a recommendation.
Hey, Heidi.
Sure.
Is it all right if I go back to a little bit of a basic question? Because I think we started to get into some of the more complex stuff, just to go back to some kind of like homeowner or like tech infrastructure, just going back to maybe a little bit to the first question. So if I'm a homeowner and I, am merchant of record, say on my own website, on Vrbo, but Airbnb is the merchant of record, as we know, for everything. How do I make decisions about, okay, I'm going to choose this like property management system, to provide this extra functionality of connecting and guest messaging management? And that, is it correct to say that if I choose a property management system like Guesty or OwnerRez or SyncBnB, that I need to coordinate that those systems work with certain payment processors, and then also confirm that that processor is accepted by Vrbo? Like, what questions should I ask maybe related to that to figure out my tech stack and how to set that up?
Yeah, that's definitely a good one.
Going back to a little bit more basic, I guess, too, just the very first setup part of it all.
Sure. Maybe we start with Cameron on that one. Are you still with us, Cameron?
Yeah, it's a good question. I think I think the answer is a little bit of it. It depends. So there are a couple ways of going about it. If you if your preference is to pick a payment solution provider and then sort of work backwards from there to figure out who you want to use for a channel management solution, a PMS solution, etc., then you can do that, or you can go sort of vice versa. Most of the property management software solutions that are out there in the market today provide options for integrated payments within their service, and so there may be a subset of payments like your Airbnb payments that are going to continue to flow directly through Airbnb's MRR solution, but you'll often find, depending on the software that you go with, that you can still sort of handle all of your payment processing as well as reporting and reconciliation through a single integrated provider, as long as you choose one that's fully integrated with the software that you choose.
So is it better to start with the processor, or is it better to start with finding the software that works best for your needs and then work with one of their suggested processors?
I think the answer is it really is up to the customer. I mean, as somebody that works at a payments company, I would say it makes sense to start with the payments processor and work backwards from there. We have customers all the time that have been with Yapstone for 10 plus years and have switched softwares multiple times but remained with Yapstone. And it's a seamless. You're able to seamlessly transition between softwares, but maintain that sort of system of record. At the end of the day, your payments and your bookkeeping is so core to your business. Obviously, so is your software, but we talk to customers every day that really want to ensure there's no interruption to their payment standards.
Yeah, I'd add to that. I've seen a couple studies where people are trying to pick which software they're going to use, and the top 10 things that they're trying to choose from price to certain functionality, all 10 of them, and payments comes in mid 5, 6, 7 in those. So to Cameron's point, I think, yeah, we'd love it if you started with us and worked backwards. I don't think it works that way a lot. I think the important question is, as you're narrowing down which software it is that you're going to use, that question about payments starts to maybe finalize your decision. Okay, do I have choice? What are the different gateways? Is this stuff portable? Who's holding the tokens? So if I do want to change software later, do I lose all the card numbers that I have?
Can you say more about that? Sorry, Paul.
Yeah.
What is the question to ask? If I change software, I want to know something is portable.
Right. Do I lose all the credit cards that I have on file? So for the most part, you're taking payments over the course of a year, and usually for about 18 months, those cards are tokenized and stored in either a gateway or within the actual software itself. So that's important to some people. If you don't have a lot of repeat clients, you don't have a lot of outstanding reservations, or it's not a big deal to have to reach out to some of your guests and get their cards again. Just know going in before you've got all kinds of tokens sitting inside that particular PMS system, and you say, I want to switch over to a different PMS system, because for the most part, those tokens aren't portable. They're specific to the processor and specific to that PMS system. It's not the end of the world, and people do it all the time, change softwares, but it's an important thing to ask and at least know going into your software decision.
Yeah, that's super helpful. Thank you so much. I know a lot of people are wondering about that piece. So
maybe just one other piece that I'll add to that too, which maybe is somewhat obvious, maybe not. But one thing that does end up sort of being a nightmare is picking a payment solution that does not integrate. And so, there was some talk earlier about large payment companies that have a strong brand name, outside of the vacation rental space. Oftentimes, we hear from customers that want to switch to Yapstone, that have been using a solution like a PayPal, for instance, just because it's familiar, easy to sign up, strong brand name, what have you. But when it comes to the actual seamlessness of your integration with your software, you want that to be a really tight integration, and so that's an important thing to keep in mind.
Definitely. I know we're getting close to our hour, but I want to get through a couple more questions that are really important. One is around chargebacks, so I'm going to jump right over that. And what measures can you take as a self-managing homeowner to prevent chargebacks, if any? So maybe Mike, we start with you there.
Well, I guess the first thing you could do as a homeowner to prevent chargebacks is to make sure that it's a really good guest experience. And honestly, most chargebacks in this space happen because the guest wasn't treated well, or the the situation was not presented fairly. So I think the first thing I would say from a self-reflection standpoint with regard to chargebacks, think through, are you actually being accurate in what you're presenting? Are you are you the reason for the chargeback? And I do think in this space that's probably a significant portion of chargeback. So that's the first thing you do. The second thing, if it's a legitimate chargeback for a no-show or something like that, I think that you can look at the rental history of somebody. In the travel sector, chargebacks are just a part of doing business, but it's almost always because there was a difference in expectation from the traveler's part. So I guess I have a weird perspective on this that might be different from the other guys.
Yeah, I'll if I can jump onto your the guest experience piece. We think it's also know your guest. The communication before arrival, during their stay, making sure you're answering the phone if they've got issues. It's the guest experience, but also know who it is that you're dealing with and build that relationship. Spot on the truth in advertising. Don't show the castle and have them show up to a shack. And then back to the contract, the way the agreement with the guest is formatted even. The words that you use, like we recommend people have signatures or the initials within an inch of any place that you're talking about how much they're going to pay, damage waivers, this amount is due here and this amount is due in 3 months, anything within an inch. So when you respond to that chargeback, it's easier for the person adjudicating the chargeback to go, look, they totally agreed to this. Use the same language in that contract that you see at the bottom of the receipts. Like, I agree to pay to the terms of my card issuer agreement. You know, you see now at the bottom of receipts all the time. Have some of that language in there when they're agreeing to the stuff. There's technology stuff, then you gotta kind of be smart about how you want to use it. But when you process it and did the AVS match, so address and zip code, did the CVV stuff match, it's really your decision how you want to proceed at that point, but those might be red flags to say this could be a fraudulent transaction that I'm about to take. We talked about it earlier, but make sure your DBA name is recognizable. So when it shows up on that cardholder statement, they know it's you. And then the other one that gets people in trouble, and it's really important, but if you're given a refund, make sure you refund the original card. Even if the guest says, I want to check, can you put it on this other card? Your policy needs to be, no, we'll only refund the original card. If you refund something else and then chargebacks start coming through and you're trying to point to, no, I did give it a refund, that is a nightmare. You don't want to deal with that. And it's the chargeback's going to come through on that original card, right? And so they need to be able to say, no, I already issued that refund. And at the same time, if you do get a chargeback and you think it is legitimate, whatever you do, don't just run a refund. The money's already come out of your account. That's going to create a nightmare for you as well.
That was really good. I was trying to take notes. I think writing up, making sure we write that up, these kind of best practices. Though the guest experience may be good, sometimes the chargeback also can happen before they even arrive, right? Like cancel policy, especially with COVID. That I feel like that kind of related to what you were saying, Paul, that you have to make sure things are clear and that then you can also fight the chargeback potentially if you are in the right. They're trying to charge back and get their money back, but they were within policy and they need, they don't get their money back. Do you mind talking about that a little bit?
No, you're exactly right. So regardless of the cancellation policy and what they agree to, when they call the issuer, and they dispute the transaction, that chargeback's coming. So you need to have the documentation to back up your cancellation policy. The other thing that happened, and it really popped up with COVID, was chargebacks that would show up, but the person couldn't come because of a government regulation. So I think Florida was the best example of that. People in Florida were getting chargebacks. Well, they were open for business, so to speak, but Florida shut the thing down. It was a government regulation. So to respond to those sort of chargebacks, you can put in the verbiage that says, no, I couldn't provide the service because of government regulation. We were shut down. That can help you with some chargebacks too.
Well, thanks for that. That was awesome. It'd be nice to follow up with maybe a blog post or an article outlining what all those best practices are. I think people find them super helpful.
Yeah, we should definitely do that.
Just real quick, anything to add to those best practices that Paul didn't address?
No, I think Paul did a really great job. I guess one other thing to note is the chargeback rules were really created and are governed by the card networks, largely designed to protect, cardholders. So they're typically going to be very consumer cardholder friendly to begin with. Of course, there are some things that you can do to help mitigate it, but I think it's important just to keep that in the back of your mind. And yeah, we'd be happy to help as far as educational content and best practices and stuff like that. As we've got a lot of ideas and expertise within our risk function.
Right, definitely. Well, I know we're just about right at time. Maybe I'll turn this back over to Heather and let her wrap us up for the day. And we could potentially do a part 2 because it sounds like we could dive into this in even more detail at a later date.
Well, I did want to just maybe do one more thing. We did have a question pop up from Ria on winning a chargeback. So in what you were saying, Paul, about how to dispute it, if there's a government regulation that prevents them from getting there, can you say more? Like, does it give that owner the opportunity to win the chargeback, or just maybe isn't a ding on their record?
No, I can't sit here and say it's going to win you every single chargeback. I just can't. We've just seen cases where when that verbiage gets included in the response to the chargeback, and along with the proof, like here's where my town was shut down, we weren't allowed to have visitors, you have a much, much better chance of winning that chargeback.
Thanks for that. Yeah, as Heidi said, and we have an Ascent article there, so we'll round out that. There's so much more we could talk about, as Heidi mentioned, and round out this article about preventing chargebacks. It looks like Ascent has written up, as well as just recapping this call. But any last final thoughts for homeowners that are trying to decide what to do? Mike, any last final thoughts?
I think if you're starting out with just a property and it's new, go, even though it's going to cost you a little bit more, just go with simplicity. As you start to create a more complicated business, then a lot of these discussions and a lot of these program changes, I think, become important.
Thanks. Cameron, any last thoughts for folks trying to navigate this as a short-term rental homeowner?
Yeah, no, I agree with Mike for sure. Things only get more complex from there. So keeping it simple and relying on the expertise of folks like Astro to learn about all the different players and moving pieces is a really smart way to handle it.
Yeah, I second that for sure. I'll just add, we're here, we're available as a resource. Even if you're not processing with us or you've got questions, don't hesitate to shoot us an email. Give us a call. We're really happy to help.
Yeah, thanks to all of you for doing this panel, and Cameron for sticking in there through our technical difficulty. And we certainly plan on continuing this conversation in 2021. So thanks to everyone who joined. And this is recorded, so it'll continue to be shared and viewed. So thanks, Mike, Paul, Cameron, and Heidi.
Thank you.
Have a great rest of your day. Thanks, everyone.
Have a great day.
Okay.
Bye.
Bye.